Time to take a look at your money this morning, but first here's a weekly. Despite a rally on stocks on Friday, the U.S. stock market was unable to erase the losses from Monday through Thursday. For the week, the S&P 500 lost nearly 1%, and the NASDAQ dropped by 1.6%, while the Dow Jones Industrial Average declined by 0.2%. So joining us, of course, is Mark Gravicheski from the Quad City Financial Group. And there's a lot to talk about with this. You know, we also just had the consumer index that came out, and we were talking about how 40-year high for inflation. So what is your takeaway from all that?
You know, let's put this latest inflation data into some type of perspective. If you look back at all the way back here in January of 2021, the annual inflation rate was reported at 1.4%, which means that consumer prices on average rose by 1.4% over the prior 12 months.
Okay.
In June, David, consumer prices rose by 1.3% in just a single month. And as you guys mentioned earlier on, the annual inflation rate did jump from 8.6% up to 9.1%, a new 40-year high going all the way back to November of 1981. And remember that, you know, the ideal target rate of inflation we'd like to see in this country is just around 2%.
And so I think the big question we all have, and I know we ask this a lot, but when could we see this coming down? Because it's been a long time going up, and we're not really seeing a ton of relief.
My crystal ball is still in the shop. Trust me. You know, it's almost impossible to predict when exactly we'll see the peak of this inflationary cycle. You know, if you look back here in April, when inflation declined from 8.5 down to 8.3%, only to surge once again in May and June. I do think it's going to take a couple of months to see how this inflationary cycle pans out over the next couple of months. But even when inflation does start to decline, David, I do think it's going to be a very slow, gradual decline, and that inflation is going to remain above this 2% target rate for most, if not all, of 2023.
But what do you think is behind this? Because you see this very large increase. What do you think is behind it?
Well, at its very core, David, inflation is caused by, too much money chasing too few goods. And since February of 2020, the U.S. money supply, which is the amount of U.S. dollars that's literally circulating around the economy, has risen by 41%. And when you suddenly add about $6 trillion of stimulus money into the economy, what do consumers and businesses tend to do with all that money? They tend to go out and they spend it. And that creates a tremendous upward pressure on consumer prices. The problem, however, is that industrial production, i.e., the amount of goods being produced and manufactured in the United States, has risen by only 2.7%. So you have 41% more money chasing only 2.7% more goods. And look, you can legitimately argue that, the labor shortage and supply chain issues have limited, the amount of goods being manufactured. But even once those issues start to get resolved, you're still going to have this tremendous gap between the money supply and the amount of goods being produced. And until you start to see a little bit more of an equilibrium between these two, I think inflation is going to remain historically high. Look, the moral of this story, David, when you suddenly drop $6 trillion onto the U.S. economy, it comes with consequences. And one of those consequences is inflation.
Oh, that is not what we want to hear, but that's the world we live in.
I'm just a bringer of the news.
Yes, that's true. That's right. All right. Well, thank you so much for stopping by.
Great to see you again. Enjoy the rest of your day.
Yeah, you too.